Cybersecurity Insurance. What does cybersecurity insurance commonly cover? Data breach response. The costs associated with responding to a data breach include the financial resources allocated towards conducting an inquiry into the breach, informing the persons affected, and offering credit monitoring services to those affected by the breach. Liability coverage safeguards against legal claims and associated expenses due to litigation related to a cybersecurity event. Covers fines and penalties imposed by regulatory bodies due to noncompliance with data protection and privacy laws. Ransomware. The financial implications of addressing ransomware attacks, encompassing expenses such as ransomware disbursements, information technology forensic investigations, and legal charges. Public relations. The allocation of resources towards mitigating public relations consequences and restoring reputation after a data breach or cyber event. Firm interruption. Firm interruption refers to the provision of financial compensation for the loss of income and additional expenses that arise due to a cyber incident disrupting the normal operations of a firm. Cybercrime. Cybercrime refers to the fraudulent actions conducted online, including but not limited to social engineering attacks and wire fraud. Coverage is provided for the losses incurred as a result of such activities. What are the benefits of cybersecurity insurance? Financial protection. One advantage organizations may derive from cybersecurity insurance is financial protection. This type of insurance safeguards against the substantial expenses of cybersecurity catastrophes. This encompasses costs associated with incident response, legal defense, and restitution to impacted entities. Risk mitigation. Insurance coverage might incentivize firms to adopt proactive cybersecurity measures and adhere to best practices, hence decreasing the probability of a breach occurrence. Compliance support. The utilization of cyber insurance can assist firms in fulfilling regulatory obligations about cybersecurity. This policy can encompass financial sanctions and punitive measures arising from failure to adhere to regulations pertaining to data safeguarding. Business interruption coverage. The inclusion of business interruption coverage in the context of business continuity aids in the expeditious recovery of enterprises following a cyber incident, hence facilitating the uninterrupted continuation of their activities and mitigating the adverse effects on revenue. Public relations. Including public relations and reputation management in various policies aids firms in restoring trust with consumers and stakeholders following a breach. Negotiation capacity. Cybersecurity insurance can enhance a business's capacity to negotiate with business partners and customers since it signifies a dedication to safeguarding data. Risk transfer. Cyber insurance enables businesses to shift a portion of the financial risk linked to cybersecurity incidents to the insurance provider, thereby mitigating the potential adverse effects on the company's financial assets. Customization. Policies can adapt to the enterprise's particular requirements and risk profile, hence enabling flexibility in terms of coverage and cost. Cybersecurity insurance should not be regarded as a substitute for comprehensive cybersecurity practices and proactive measures. Instead, it should be considered an integral element of a holistic cybersecurity strategy. businesses must collaborate with insurance providers to evaluate their distinct vulnerabilities and guarantee that the selected insurance policy meets their cybersecurity requirements and risk appetite. In addition, engaging in frequent reviews and updates of the approach is crucial to maintaining its efficacy in light of the ever evolving landscape of cyber threats.